Hey there, and welcome to Lesson 4, Tax Brackets and Your Tax Story. In Section 1, we talked about how the tax brackets were lowered in 2018 and are essentially on sale until they expire in the year 2025. In this lesson, I want to explain in more detail our new tax brackets and how they can be used to your advantage while they are on sale. To start off, let's do a fun exercise. Bear with me. At the end of Section 1, we asked you to collect several statements and documents along with completing your retirement financial profile. One of those documents was a recent 1040 tax return. Go ahead and pull it out of your folder or pull it off the shelf and look for the line taxable income. This can be found on page 2 of your 1040 individual form on line 10. Once you find that, let's take a look at your current bracket and determine your tax brackets. Where does your taxable income land within this bracket? Are you in a 12%, 22%, or 24%? If you're looking at this tax bracket, you'll see that the left column is if you're filing as a single, and then the right column is if you're filing jointly. Now remember, if you're in a 22% bracket, this doesn't mean that all of your income is taxed at 22%. It just means the most recent dollars and any new dollars would be taxed at 22%. The example that I like to use is a swimming pool. Tax brackets are like filling up a swimming pool. The first dollars at the bottom, once you start filling up the pool, are taxed at 10%. And then once you get to a certain level, all those dollars are taxed at 22%, and then 24%, and so on and so forth, up to your taxable income or your fill line. Now, let me show you an example going back to our family in Section 1, Bill and Janet Smith. You'll see in this slide that this is an example of their 1040 page 2. You can see that line 10 shows that their taxable income is $75,000. If we take that $75,000 and lay it over into the tax brackets, you'll see that they were in a 12% tax bracket in their working years at the age of 55. As Bill and Janet's tax story progressed, you'll see that when they retired at the age of 65 and turned on the Social Security, their income reduced, but they stayed in the same 12% tax bracket. However, once they turned the age of 70 and a half and their RMDs were added to their tax story, they not only increased in income, but they jumped into the 22% tax bracket. So take a minute to look at your most recent 1040s, find your taxable income amount, and find your tax bracket. Now that you have identified what your income bracket, or what we call your marginal effective rate, let me show you where Bill and Janet missed a huge tax planning opportunity. From the age of 55 to 70, Bill and Janet could have filled up the 12% bracket by converting $2,400 a year in their working years and $48,000 a year in their Social Security start years, all staying in the 12% bracket, reducing the percentage of their Social Security and being taxed in their RMD years and reducing the risk of increasing tax rates. This was a huge opportunity that was missed for Bill and Janet. The idea here throughout this retirement taxation masterclass is that you don't have to miss that opportunity as well. Finishing up this lesson, I want to introduce to you the tax story worksheet that we're going to use throughout this masterclass to help you understand and then ultimately rewrite your tax story as we define where you're at, where you will be, and how you can improve upon that. So if you look at the screen, you'll see Part A of your tax story. This can be found in the resource section of this course, and it does have a Part A, a Part B, and a Part C. However, in Lesson 4, we're going to take some time looking at just Part A. As you can see in this tax story, we've labeled out for you 3 columns or chapters that you might relate with: your working years, your Social Security start years, and your RMD years. Naturally, the working years column is for any years that you are still working and you have wages. For Social Security years, those are the years that your Social Security starts and might add to your wages if you're still working or replace wages if you retire at that time. And then then naturally in the RMD column, this is to show how your RMDs are added to your tax story. So if you want to take a moment to fill out all of these from wages, Social Security, pension, rental income, annuity income, IRA, 401k withdrawals, or other, anything that might be applicable to you, this will help you start to lay the foundation for what your tax story will look like. Now that you've been introduced to the tax brackets in your tax story, you can start making some progress towards putting your tax story together. We'll see you in the next section.